we are going to be answering Reddit's retirement questions. Trust me, these are not all of them. These are just some of them, all right? The first one we're reading is on the personal finance subreddit, and the post says, recently laid off, employer is forcing 401k disbursement. What should I do with it? We have somebody who is self-identifying as laid off with more, they have $1.3 million in the plan.
Nobody's
Katherine,
forcing out.
No.
What?
No. Very, very simple yes, no question.
Okay, so what's the question?
Is $1.3 million more than $7,000?
Hell yes.
Okay, all right. And the person is under age 73. This is not a distributable event. If this person was laid off, they couldn't take the money out if they wanted to. It's not a distributable event. Okay, we're in personal
Seeking
finance.
advice. Should I continue to invest in my traditional 401k or switch over to the new Roth 401k plan?
Okay, my new life's goal is to get every Reddit user to understand there is one 401k plan. How many 401k plans are there?
One.
There's one 401k plans. How many contribution options are there?
Two.
Okay? You have two contribution options, all right? Pre-tax or Roth or some variation thereof. And no, you don't get to double the limit because you're doing Roth, okay? It's not a new 401k plan, people. If this person wants to start contributing to Roth in their 401k, first off, they need to figure out, are they already at the deferral limit for the year, okay, or are they going to be at the deferral limit for the year? If not, can they afford to add on to the deferral amount and have that additional amount be Roth, because you can do that, or do they need to, or because they can't afford to have more money taken out of their paycheck, understanding now that they're going to be paying more in taxes currently, do they need to just go to HR and have HR take the pre-tax be a Roth deferral? Okay, but that is something they're going to have a conversation with HR to figure out the math on that, the mechanics, and where they are on the limit. And then also,
I would say it always takes a form.
There's a form of some sort.
It always takes
There's
a form.
a form of some sort. You are going to be officially notifying somebody of something. And then, for extra credit, for those of us who like to confuse things,
Oh, Lord.
well, no, this is good for them. If your plan allows for it and the vendor partners allow for this, have a look to see if you can convert pre-tax money to Roth inside the 401k plan, all right? It's not a distributable event. You're turning pre-tax money into Roth inside the 401k plan.
One bucket to the other.
Legal, but
you
not
pay
always
some taxes.
possible. You're going to pay taxes on the amount you convert, so don't forget that. Once again, we're in personal finance. Normally these things add up all over the place, but this week they're all in personal finance. The question is, should I have a 401k? Now, normally that we would think that's an employer asking should they have a 401k plan, but this person is an employee trying to figure out if they should start contributing to a 401k plan. This person is relatively young. They're under 30. They're not making much money because they're at the beginning of their career. They can't afford to save much, but they should probably, and I know we've got some life expectancy issues with this particular person. So we got two things on that. Forgetting the life expectancy issues, which we'll get to in a second, okay? Based on the age and based on the compensation right now, yes, do a deferral, but have it be Roth. You're almost always, with this person's particular age and income amount, they're almost always better off doing Roth because they'll be able to take the money out tax-free. Okay. Now then, this particular person, and I didn't look up the exact details, this particular person has a life expectancy issue despite their age, so there's a little bit of sadness in this that we keep forgetting about, forgive me. There are some rules that we're going to have to do a different video on where when people become permanently disabled, the excise tax rules go away. There are some new in-service distribution rules for certain individuals that go along with Secure 2.0 that will allow people with certain life expectancy issues and disabilities and other medically related things to take money out without penalties. Not untaxed but without penalty. There are some new things because of Secure 2.0 that make this less of a bad situation only from a monetary point of view.
New job doesn't have a 401k, but old job did. What to do with that account? I worked at my old job for about 2 years and have $14,000 in their 401k. Good job. I left 2 months ago and started a new job with no 401k. What's the best way to manage that account now? Is there any way my job can screw me out of my money?
The old job,
made
no.
$130,000 last year and should make at least $150,000 at least this year.
Okay. Have your new employer email me at sales@hunterbenefits.com. Okay.
I would say if you have an
first thing I
employer
would say.
paying people this amount of money, they should have a 401k plan.
Also, an employer paying people this amount of money, are you an employee or are you a subcontractor? Okay, and if you're a subcontractor and you're not an employee of the company, you can have your own 401k plan, all right? There's a lot of stuff going on here. However, you can have your own individual IRA. Might have some compensation limits that's going to restrict that. Okay, but going back to the first part of the question, can the employer screw them? I think, once again, very, very simple math questions. We are all about math quizzes today. Katherine, is $14,000 more than $7,000?
Yes.
Okay. This person cannot have a force out. However, there are some things where an employer could legally have the terminated people pay some more fees. Okay. So pay attention to what your fees are and go and have a look at what an individual IRA is going to cost you. If you're going to keep your money at your old employer's plant, which is your legal right, you do have some obligations here. This is not all about the employer. You have to do your part. You have to make sure, first off, you need to make sure your employer is still in existence and hasn't gone out of business. You have to make sure your former employer has your current mobile number, your current personal email address, and your current correct mailing address. Whenever either of those change, you need to make sure they always have those three are current. You need to make sure the record keeper is the same and that you log in once every 11 months, so it's twice a year, okay? To make sure that you can still log in, that they've got your information. That's going to be very important from a cybersecurity point of view. And if you are frequently logging in, if you can't log in one day, that means the money's moved. And it's not a new plan. They've just changed service providers, so you need to know where they went to.
Well, they were supposed to notify you. That's part of the reason
so then
you need
go
to
back,
have their
go
address.
and look at the stack of mail or emails that you got from your old employer to see when they told you that they were changing from one record keeper to another. Okay?
So you do need to pay attention.
You do need to pay attention. If you're going to leave it at the old place, which is your right, you need to pay attention and stay involved.
Okay, so we're going to bring it home with the last one. My job just contributed to my 401k 4 months after I got terminated. Hallelujah. Pass the pickles. I don't know.
Hallelujah, pass the pickles. Once again, we're in personal finance. Now, the funny thing about this is the phrase, I was contributing at max match, okay? In other words, so that's shorthand for they were deferring enough to make sure that they received the maximum match allocation. That's not a problem. This is not a big deal. Matching contributions do not have to be made with your deferrals. There is nothing wrong, there's nothing shady, there's nothing illegal, there's nothing cheating, there's nothing sideways about an employer making one matching contribution for everybody after the end of the plan year. Now then, but it looks like with this one, I do remember applying to this one looks like there was a true-up for whatever reason, okay? And this person is getting a larger employer contribution amount after this person left the company and seems to be complaining about it a little bit, which is a bit strange.
You got more money.
They got more money.
More money is good.
If you already had a distribution, make sure you get a residual distribution, because depending on the time frame in between distributions, you may have to complete a new distribution form. So there's nothing wrong with this. But don't engage in leakage, okay? Hopefully, if you already emptied your account and you rolled it over to an IRA, all right, roll this account over to that same IRA so you're only dealing with one IRA. All right. If you like this video, watch some of our other watch some of our other 401k videos here. You know the drill. Tell your friends, tell the people you don't like, just tell everybody to watch us, like, subscribe, comment. And if you have a very specific question that you don't want to share on the internet, email us directly at sales@hunterbenefits.com and we'll make sure to get back to you as soon as we can. And don't forget to keep those cards and letters coming.
Thanks for watching. Toodaloo.